welcome back to another session of Unocoin's AMA. Aka, ask me anything. Well, every Tuesday we get this lovely opportunity to talk to our audience directly and solve their queries on one-to-one basis. Well, today we have very special guest for you guys, my dear audience. And you all know how things have been around crypto regulations and laws recently, amid the changes made by our government of India. And the complexity has caused a hell lot of chaos in the world of digital assets. But well, किसी ने सही कहा है, necessity is the mother of innovation. और इसी necessity और जरूरत को समझते हुए मिस्टर तन्मय सिंघल laid the substructure of a whole new innovation. India's first crypto tax and portfolio tracking system, binocs. And we are proud to announce that Unocoin will soon be integrated on the binocs platform. So hello guys, this is your host Shambhavi Soni for today, and I am thrilled to introduce our sensational guest for the evening, Mr. Tonmoy Singhal and our one and only Mr. Sathvik Vishwanath. Hi sir, I'm glad to have you on our EMA today. It's a great thing. So, sir, first of all, starting with the entire crypto regulation thing, how they have been working. So, there's this question around it. How much do we have to pay in crypto tax system as prescribed by the government?
No, first of all, Shambhavi and Sathvik and to the entire Unocoin team to host Binocs and me here. So it's a pleasure being here, and thank you for this opportunity. So, to your question, this is the first year of Government of India regulation and laws about taxation. And these are still 101 implementations of taxes. And in a straightforward way, for any gains in the crypto asset, any trading, any investment done, people as retail investors are required to pay 30% flat tax on their gains.
Yeah, 30% that is. Recently, there's another introduction of TDS. Can you just shed some light on that as well?
So, government, implemented this indirect way of collecting also taxes, which is for any value of trade, any sell transaction which is happening, the buyer of the asset is required to pay 1% of the sale value and deposit it on behalf of the seller. So basically, this is the law. Government of India basically prescribes all the crypto assets as the VDAs or virtual digital assets, and whether it is a stable coin, whether it is a cryptocurrency, altcoin, NFT, anything which comes in the parlance of crypto is defined as a VDA. Any exchange of VDA, the buyer is required to deposit 1% of the sale value with the PAN number of the seller as the TDS. So
Okay.
yeah, that's the rule.
Okay, another thing, guys, I just want to make it clear for you all. Like, if you have any questions in your mind for our guests for the day, please just feel free to drop comments in the comment section below, whichever platform you're watching it through. Just drop your comments, and I'll make sure that they're answered. Okay, so one more thing. So, recently there's another hype in the NFT market. And obviously, India is one of the most affected market when it comes to arts and NFTs. How do you think these laws are going to affect these?
No, absolutely. So among the definition of VDAs, the government of India first, with the implementation of taxes on crypto, defined a term called VDA, which is virtual digital assets, where any asset of the nature of stable coin or cryptocurrency or altcoin or any, let's say, even unlisted coins, including NFTs, including if there are some financially underlying value-driven gaming tokens, are all encompassed in this new asset class called VDA. And any VDA, they've described that these are going to be the tax rules. So basically, any NFT which is being bought and sold for any financial or financial equivalent consideration is required to be taxed under the Indian laws.
Okay.
Yeah.
So, Sathvik, one question for you. Okay, so how do you think all these laws that Tonmoy just explained are affecting the companies involved in this business?
I think this particular law system, obviously, it's like a knee-jerk reaction. does exist to some extent. So wherever the new such kind of taxation comes up, it's usually not like a super welcome anyway, because people were having their own status quo of how they want to do their business and trading. So now that the law is in place about how the taxation should work, and everyone today understands that this is not going away. Maybe the numbers will change a little bit, but it's extremely unlikely this entire system of how it's now they're not going. So it will just keep. Eventually, everyone have to factor it in. It should become imbibed. Like for example, if you go to a restaurant, you're paying GST, right? So that was not the case maybe even like few years ago, more than a few years ago. It was working in a little different way, right? So now as everything continue to come under the ambit of measuring who is earning what kind of income and making sure maximum number of transactions are happening through the bank accounts or NBFCs, etc. So these are to be expected. So now that we have this in place, we will have to wait. It'll take this time will answer over a period of time, maybe in about another 2 quarters or maybe in a year. People will stop talking about taxation for cryptos. Like how, for example, here when for example employees are working, they don't keep on talking about TDS.
True.
They understand that it exists. You live in a country and you have the loss of the land. uh, you need to follow, and obviously on the other side there are benefits that the government is giving you, right?
Yeah.
So that will eventually become that way. So right now I am not actually seeing a lot of benefits as such that the government is planning for the industry like crypto. But this is the first time they are even uh, specifically mentioned the taxes. So till now, everyone was paying taxes as per their income tax slabs and such. So government a lot of times did not even know why a specific amount of money is coming to them. But now they will exactly know what kind of money they were able to make. Now comes the time, maybe next year, the other next year. It will be time whether they'll spend a part of that money to do some education, bring in awareness, what kind of plans they want to come up with, how much they want to encourage the industry. All of that depends upon this particular number, which is a like a cumulative tax that the entire industry will pay to the government now.
Okay. So one of our users, Mazula Khan, is saying hi to you. Hi, sir.
Hello,
Hi to
hello.
both of you.
Hello.
Okay. Moving forward, so there's this another thing. Okay, in India, people really want to save on taxes, like somehow some deductions. So what kind of deductions can we have with crypto?
So right now, Shambhavi, the law of the land says that there are no deductions in crypto taxation. In fact, we keep getting questions around how can we avoid taxes, save taxes. So, I mean, my recommendation, and I've been always on this, that we can't really avoid taxes. Taxes are the necessity of a country like India, and
Mm,
for us to have the right roads, right infrastructure. Today itself there was a issue with Arunachal where there've been a military exchange between Indian and Chinese army. For us to survive and prosper as a country, government needs taxes, and taxes are the ways to fund the government operations. So taxes, like Sathvik was saying, cannot be avoided. Taxes are a bare necessity of life, and in terms of the taxation, the optimizations which are possible, are definitely there. But there are, when it comes to crypto taxation right now this year, there are no deductions per se available. There are the only deductions which are available is to deduct the source of or the cost of acquisition of the asset, plus the, let's say, if there's any transaction cost, and based on that cost, if there are any gains, if once you subtract it, is what your gains are, and then you pay 30% roughly tax on that. Um there are ways to sort of do tax loss harvesting, although that evidence is much lesser in India. But I think as government becomes more and more aware of crypto and digital asset class, their belief and of the benefit of the ecosystem will also become stronger, and they'll launch other more beneficial tax schemes like they have done for equities and other asset classes.
Okay. So there's another thing, like, a lot of times this has happened. There have been reported cases of this thing, how people try to convert things into donations, and so are there any tax on crypto donations like that?
No, absolutely. So, there are, although from the government side, no specific definition of how the donations will be treated. But let's say as an individual taxpayer, if you are, earning different streams of income, including there is a evidence of donation, and if it is through an unrelated party, it will sort of get clubbed to your income, and
Okay.
you will pay, your regular slab of
Okay.
tax. So, and it'll be like a regular income, like a salary income. And let's say, whatever salary deductions are there, you'll sort of experience that. And then based on that, you'll pay whatever income tax you have to pay for that.
Okay. So another thing, recently our country has also launched the CBDCs, central bank digital currencies. So how do they come under all this taxation provision thing?
So I think, again, to Satvik's point, uh, I think directionally, government of India is having a good and favorable view of crypto. A couple of hard examples are launching of CBDC, launching of taxes, uh, and that sort of legitimizes the technology and the
Yeah.
belief in the government of the future of the technology.
Yes.
What also the launch of digital rupee also does is, I mean, if you look at the current taxes, even the stable coins are considered to be digital currencies, and any exchange of, let's say, if you're buying ether with a USDC, USDT, or any equivalent stable coin, is also qualifying for a two-way TDS and taxation. But launching a digital rupee makes at least one leg of that transaction much more simplified and much more, favorable in terms of doing those transactions. So digital rupee transactions is expected to not be treated as a virtual digital asset. It'll be treated as a currency, and therefore any exchange of any VDA with digital rupee, at least the digital rupee leg of it is not taxable.
Okay, nice. So our users are saying hi. Malar Kodi is saying hi to you, Sathvik. Hi, Sathvik, sir. And there is Don Pablo. He's saying hi, guys, to both of you.
Hello.
Okay.
Hello.
So, yeah. Moving on to the next question that we have for you. You know, how things work around it and how the losses are a clear part and parcel of any trading business, be it stock market or be it the crypto market itself. So, how does one handle losses in this case?
It's a great question, Shambhi. So the current law of taxes on crypto side says that one, you can't offset your loss in one type of digital asset versus any other type of digital asset. So if Ethereum, but a loss in Bitcoin, you can't offset the loss on
Okay.
Bitcoin on profit of Ethereum. The other thing is you can't carry forward your losses. So is the case with some business incomes and other income streams. You can carry forward your current year's losses or previous year's losses to this year or future years. Again, I would say this is a tax implementation 101, which will hopefully evolve with a period of time. So right now, the law of the land says that you can't offset the loss of current year with the profits of the next year,
Okay.
or even inter asset class losses. So that's the current state of the rules and laws in India right now.
So here, let's say you're doing a business, and if your business makes profit, and then on the other side, let's say your crypto portfolio makes a loss, so then you cannot offset those two as well, right? So that all, and loss cannot be carried forward. It cannot be with other assets. It cannot be with other incomes. So it is like absolutely on its own, and it also does not belong to your income tax slab at all, because they have set up the 30% as the fixed uh, tax for it.
Yeah.
So let's say if your total money that you earned across the entire year is 10,000 rupees only, that is in crypto, you still are supposed to pay 3,000 rupees. So it's not like first 5 lakhs there is a exemption and such. So that actually will not apply here. So and now the other little challenges that comes with this is, um, even though the earning that you have done is minimum, or maybe the only thing you did is crypto and you have lost, and you're still required to file the taxes forcefully, and you have to find a competent auditor. to do this, where in the previous mechanisms of how the taxes was assessed, there was no need for it.
And just to
So
add to
there is just like it's getting. I wouldn't say. I mean, maybe streamlining is a bad word. It's more like everything is accountable. I think
yeah.
that's how it come down. Yeah.
And just to add to Sathvik's your point, I think even if you're making losses, it is important to file taxes on crypto, because tomorrow, I mean, government is witnessing that there's a widespread asset price correction in the industry, and tomorrow they may also give some sops in that. I mean, they may have some positive, let's say, favorable things that you can maybe offset your losses of previous year with current year's profit. So if you don't file for taxes, those opportunities will be subvented and not being available. And just to add to your point, I mean, so Shambhavi is the case with any other asset. So let's say if you've deposited your money as a term deposit, like a fixed deposit, which has made some money, let's say a lakh rupee of interest income, but you've invested in equity in India and you made losses in equity, you don't offset your term deposit income with the loss made in the equity. So the I think the way government thinks about crypto, it's not just one asset class. It's there are flavors of crypto which are like equity like, there are flavors of crypto assets which are debt like, there are dividend like assets, there are term insurance like assets, and so on. So for them to understand what is very difficult. The great thing is they are with themselves launching digital rupee, their understanding of different kinds of assets is radically changing, increasing, and tomorrow they may be able to club that, hey, these are equity like crypto assets, so maybe you can within those asset classes offset your losses with the profit of other, the way it is right now with equity, the way it is right now with debt, and so on. But right now, they treat the crypto asset as every asset is like a distinctly different asset. But I think with time, their understanding will increase, and I mean, to promote the industry, they'll come out with more favorable tax principles, and which mirror and mimic the other asset classes as well.
Yeah, it is just a very, very optimistic view of.
Yeah, very optimistic. I was about to say that it's a very optimistic view, because kind of this discrimination in, so what
It will
happens
not
is,
go away soon.
yeah. So this is a clear discrimination between two kinds of assets. But yeah, like you said, as the understanding of this will get better, I hope the laws and everything will also, they'll just ease up on those things too.
I mean, here I would just like to remind that in several cultures, in several countries, and when I was young, my grandmother used to tell me, hey, my father is trading equity, and it's like a gambling. So asset classes over a period of time have matured, people's acceptance, awareness of them have changed significantly over a period of time, and same is gonna what will happen with crypto. I mean, it's initially when a new thing comes, like an alien, right? And you're more apprehensive about it than you see the benefits of it. The more you understand it, the more you get aware of the pros and cons. Now, so many crypto assets are like equity. There are like different ways to trade the equity and so on. So and if it's a better way of a more efficient way of trading equity or trading debt or any other financial asset, so government will understand it. I mean, there's no reason why they will not. I mean, for example, we've been party to so many transactions where government in bits and fractions is also introducing real estate transactions on crypto. So I think a lot of these changes are happening. What will happen in the next 3 months, 6 months is not known, but let's say eventually a period of 2 3 years, we'll see a dramatic, I think, more efficient system is what I'm expecting.
Well, yeah, it's a growing phase of financial knowledge, I would say.
No, not only that. I mean, like what I was saying about the mindset of people.
Mindset of people, yeah.
Yeah.
Like it's
So maybe about
evolving.
20 years ago, people were thinking, okay, this equity trading is like gambling, commodities
Yeah.
gambling. Now, because there are bigger gambles, this has become smaller gambling.
Yeah.
Maybe and eventually they're accepting, okay, this is comparatively little skill based, right?
That's a
So,
mode of
but now here we are talking about a gap of about 2 decades, right?
Yeah.
But do we have that kind of time to wait for the taxes and corrections in crypto?
Well, yeah,
Will
that
be
is
a challenge, right?
yeah.
So their system will work the way it is, but it is just our industry which is usually very fast paced.
Very fast paced.
Yeah, so that makes it little tricky, and there is a more gap between the way we think and the government thinks, and it's actually it could be creation of the company to that becoming like $100 million or $1 billion company to shutting shops. So anything to anything happens quite quickly.
That is
So
true.
that will make it little tricky for governments to see that. Okay, I mean, like, how do they even analyze? 2 years ago, a company didn't exist. Last year, it existed. By the end of last year, it was like $1 billion company. Mid this year, they raised again another round of investment, and by the end of this year, company does not exist. And for them, this looks like one financial year. Like everything happened, so it won't even come into the proper mechanism of like how they should look at this as to even come up with saying, okay, if it happens this way, it works in this particular manner. So the speed at which it is growing, um, or I would say speed at which it is moving, whether it's growing or not growing is you can argue about that, but yeah, the speed at which it is moving, it's, I mean, it is the forceful, um, I mean, the regulations have to forcefully catch up. So that is the like tricky part here. But in a country like India, it's like a two-edged sword, right? So right now the regulations are not there. I mean, not like all pieces of regulations are not there yet. Only some pieces are there. So okay, you're doing few things, that is fine. But if the regulation comes up and then if they take advantage of regulation, then it actually becomes correct, right? So there is nothing wrong, because I mean, if you don't have the rules, you play the game in such a way that more or less it's manageable, because you're also learning. People who need to write rules are also learning.
Yeah.
But once they write it, then you can take advantage of it in a very very bad way. And people in India are like I'll call it as jugaad kind of thing. Like it actually is very it happens very fast, and people in India actually think in that direction faster.
Yeah, in terms of finding
Loopholes and how to take that, right? So that's obviously the reason why even the governments will be very afraid to just come up with regulation before they understand all aspects. And I still think all aspects of crypto industry are not yet revealed. It is still growing. So after we see that, okay, this is like, at least we understand all pieces of the puzzle now. When that kind of status quo comes in, then it could be a couple more years for the eventual regulations to come up, right? So it's like a tricky thing right now.
But I also, to add to Satvik's point, I think as an industry, crypto's heartbeat is much faster than that of other asset classes. And like he was rightly saying, it requires a different ways of regulators to look at it. And I think the more advanced countries in crypto ecosystem like Switzerland, Singapore, UK, Luxembourg, they have separate teams who are regulating crypto, and their ways of addressing some of these issues are not quarterly, but sometimes not annually, but sometimes, let's say, monthly, and so on. So the heartbeat at which government regulators have to come up with, understand the issues and come up with the solutions it has to be different than other asset classes.
Yeah.
So I 100% agree with that.
Even so another thing, like there are different ways how we are taxed. We are taxed monthly when it comes to our salary, our income tax and everything. There are yearly tax filings that we have to do. There are quarterly tax filings that we have to do. So how does it work in the crypto space?
So see, crypto for most cases is a digital asset, and the underlying thing is it's an asset, whether digital or not. And you can play around with an asset as a financial instruments, or you can get compensated in the digital asset space. So let's say broadly there are two classes where we are getting compensated for our work or our business in form of digital asset. So then whatever either business income side taxation or salary income side taxation applies to any other asset class will apply to digital asset as well. So let's say if you are receiving full or part of your salary as a digital asset, let's say in Ethereum or some stable coins, etc. If you're a resident of India, you have to comply with the local tax laws, which require you to file for taxes monthly and square off any delta amount quarterly. So quarterly, your employers have to square off any, let's say if they've overpaid, they can in every quarter pay a little less. If they've underpaid, then they can square off by paying every quarter and slightly more money as taxes. Then comes the any financial asset. So where you're dealing with that asset as a financial instrument. You're buying it at a certain price, and then you're making some gains, and you're selling it at a certain price. Now that compliance for across any asset class, whether it is debt like, whether it is equity, commodity, or any other, including digital asset, is to be squared off in terms of tax treatment quarterly. So any digital asset which is being delved on or bought and sold by any investor has to be treated, and whatever is the net tax due has to paid up every quarter. So June, September, December, March, and then finally your annual tax filings have to reflect in any of the profit or losses that you made in that asset class.
Okay. So this TDS thing, how is this deducted? On a monthly basis, quarterly basis?
So TDS thing is deducted on a monthly basis, or in fact immediately at the
As soon
trade.
as you make a transaction.
Yeah, and the buyer of the security is expected by the end of the day to deposit that, and usually, individually it's very difficult to understand what, how can I deduct tax on behalf of somebody else and deposit it, from the PAN number perspective. So, which is usually being done by exchanges. So exchanges have a great understanding of the taxes, and then they facilitate this compliance on behalf of the buyers and sellers. The exchanges have their own, again, heartbeat to deposit the taxes on behalf of the sellers with their right PAN numbers. Usually the cycle for that is every month. So every month, government will do one sort of check out audit to make sure that the net dues of taxes or TDS collections are due in their reserves. But the other thing about TDS is it's a tax paid by the seller, and in a lot of cases where they're probably overpaying the tax, is claimable by let's say they made $100 of profit on Ethereum. They've already paid $10 of TDS. So then whenever they're filing for their annual returns, etc., they only need to pay $90 on Ethereum as tax. And if they've made losses and they've still paid TDS, they're due for a refund. So, which is also why one should, file
In
for
a
their
sense,
taxes.
deduction when it comes to TDS, that we
Right.
can have here.
Right.
That is one
Yeah.
benefit.
Yeah. Yeah.
Okay. So in this whole thing, we have this one benefit on TDS, that if we have any losses or so, we can claim our refunds and everything. So moving forward, there's again another thing about how mining works. It is again a part of business. It's again a business how mining is working all across, not just in India, but in Texas and other places where it's massively done, and it's a very good source of employment for so many people out there. How is taxation in India specifically going to work on that?
Well, it's again a great question, and keeps coming to us every now and then. So, see, mining income can be treated in maybe one of these multiple ways. If you are in the business of mining coins, and you're generating coins as based on your efforts on mining, so it is like a business to you. Mining is your business, and it will be any gains in that business is treated like a business income, and minus the due cost of expense that you've incurred in, let's say, generating that income. So it could be the machine cost, it could be establishment cost, all you can deduct from your gains, and then net of that is whatever tax slab is applied to your business is what as a tax you pay. In case you're an individual and let's say mining is like your hobby project, then any mining income is like your maybe salary income, and then it gets added to your entire salary. Let's say you're employed somewhere and you've made $10,000 of mining income as well, so your entire salary will become your normal salary plus $10,000, and based on that your normal income tax will apply. So there'll be an extra tax due to the mining income that will apply to you. So yeah, that's how typically you do that.
Okay.
So in simple words, mining is not exactly seen as trading,
Right.
right? So because the profit that you get through mining, even though the incoming money or value is coming as crypto itself because it's mining, you still don't fall under straight 30% slab, but you fall under your normal income tax slabs.
Absolutely. Yeah.
Okay.
Yeah.
And if the losses happen in mining because you invested more and you could not get more, I mean, like you happen to only get less. Um, if that happens, that kind of loss can be offset with other businesses.
No, it's a great question, Sathvik. The way, again, the laws, I think, can probably get more clearer here. But the way, and a parallel here is, let's say, if you are, like a software engineer earning, let's say, 20 lakh rupees per annum, you have a great hobby of teaching and playing badminton, and sometimes do coaching, you make money in badminton, in which case your badminton coaching fee is like your income. In case, you thought, let me advance my hobby, let me set up, take a center on rent, and
Okay.
and maybe it'll incur some expense, but maybe, I'll make more money, and it'll compensate for my cost. So in the provisions of taxation from a hobbies perspective, that expense is not allowed. It still is like your hobby expense. It's like your expense. You've shopped around, you've taken something, you probably booked a hotel room or something like that. It's like your normal expense, unless you somewhere declare it like a business. In
Like
which case,
proprietorship,
yeah,
that kind
yeah.
of thing.
Okay. So with this, guys, I'm calling for a short break. Okay, don't go anywhere. Stay tuned because after this, we are going to take all of your questions and be prepared with your questions. We'll be back. again your host Shambhavi Soni, and we have Tanmoy and Sathvik with us for you. And now we'll start taking your questions. We have a question from a user called Success Solution Care. He says, "Hi sir, I have a question. Like, if we are only receiving BTC and withdrawal funds in our bank, so how much we will pay as taxes on this?"
I'm sorry, we're receiving BTC and
Yeah, Bitcoin.
Taking the money
Withdrawal
to the
funds,
bank.
yeah, they're just withdrawing Bitcoin as funds and into their bank account. How much tax do they have to pay on that?
so if they're getting Bitcoins as, let's say, gifts, then the cost basis for Bitcoin is zero. And then for the entire money or entire withdrawal amount on the Bitcoin leg of transaction is liable for a 30% tax. In case there is any cost basis, then it comes like a financial instrument, because maybe through some, let's say, movement of asset from one exchange to the other, or etc., if they've incurred some cost in transaction and also on buying that asset, then it again there's a material meaningful cost basis, and they can minus the entire cost of acquisition of the asset, and then delta money is to be taxed at 30%.
Okay.
No, to my understanding of that question is like he is receiving BTC as a consideration, maybe for his products or services or anything like that.
So yes, mention one of the examples. Like, if I receive 10 lakh of payment through BTC,
See?
so do I have to pay taxes on the whole 10 lakh?
So, if the nature of that payment is through, let's say, some services rendered, or let's say, if it's like a consulting income, which will get sort of clubbed to your income, your overall income. And let's say if there's, in absence of any other source of income, that 10 lakh rupee is your salary like income. And in case you're an individual taxpayer, then you sort of go with the regular tax slabs or on, the salary kind of payments.
Yeah. So this is just like instead of receiving rupees to the bank account directly, the person is receiving as BTC.
Yeah.
So on the day on which he receives the BTC, he should see whatever is the market fair value, and create the required invoices and such. And let's say he has, out of 10 lakhs that he has received, he has already spent 9 lakhs to give services or products, whatever are the expenses, then only 1 lakh will become taxable. But from my understanding, that 1 lakh as well is not like crypto tax of 30%, but it is still a normal individual's income tax slab or taxes. So in this entire case that we're talking about, the 30% crypto tax will not apply at all.
Right.
It's not applicable.
It's not applicable.
So good news for you, success solution, and you won't have to pay any taxes on such withdrawals. Okay, so there's an interesting question from one of our users, Don Pablo. He's asking, is Unocoin tied up with binocs for tax calculation? Will we be able to get complete tax payable reports from binocs/Unocoin? So they want to know whatever transaction they make on Unocoin, will they get a report on binocs for that?
No, absolutely. So I'll let Sathvik also add to it, but very so already we have integrated through Unocoin through CSV. I think tonight we are having an API integration. Now these are two components of the soft integration with Unocoin, but eventually in next 15 days or so we are going to have a much stronger integration, where on the Unocoin website itself you can download your tax reports powered by binocs. Maybe.
Yeah, that's true. So here, yeah, I mean, like how difficult it is or how easy it depends upon the integration, right? So right now, one way is to just download the CSV from unocoin.com and upload it on Binocs, and it will tell you what the taxes are like. So this is as if Unocoin and Binocs don't even know each other. Okay. So the second one is Binocs knows about Unocoin. So what they did is they created a module or a portal where you can key in the API key and secret that you generate on Unocoin, so that Binocs service can see the transactions that has happened on Unocoin and tell you what the tax is. For that, there is nothing Unocoin have to do. It is just that the Binocs team will work on it to make sure that they connect to Unocoin servers and get the information. But the last one, which actually I would say is like a two-way tighter integration, is on Unocoin as well. You will have a page where if you click on that, that will do the required magic behind the scenes, and it will open up a new page for you. That will be powered by Binocs. That will show you all the required data. So in the last one, you don't need to upload CSV. You don't need to do any kind of copy pasting of API and secret keys. It is just like a click of a button, and you know what to do. Right. So eventually, that's how we will. That's pretty much where we intend to get. And on the other side, the good news is we have some time for it. It's because this taxation and all those things, you should be bothered just after the month of March. So by then, I'm sure there will be a very seamless, straightforward, easy to do solutions that will be coming to help for all of our customers. And from my conversation from I mean, with Tanmay was saying for some X amount of transactions, it will be free of cost.
Absolutely. So yeah, I mean we're giving several couple of thousand accounts to Unocoin customers completely free, irrespective of the number of transactions, and
Wow.
below a certain number of transactions, it'll be forever free.
Okay, so it's important for Unocoin customers to go quickly and claim this, because see, at the end of the day, whatever the report that gets generated either through our partnership or through Binocs directly, uh, that eventually will go to the CA, right? So for them to add that to the rest of the incomes and whatever is already happening. So it's not like end to end, it's done kind of thing. Or eventually maybe Binocs will continue to provide that as well, where you upload your equity trading statements, commodity trading statements, your salaries, I mean, if you put everything, then they'll exactly tell you how much to pay, and try to close that up, just like very similar to a self-service CA kind of thing over a period of time. But right now, I think this particular statements, which is like a part of what you need, and by taking this, at least the CA need not break his head of figuring out how the crypto works. He will take this as the ultimate truth for time being, whatever the statements generated by Binocs, and we will do the rest of things which he's good at, right? So I think maybe in another 3 years, 5 years, probably all CS will definitely be like really good at doing the crypto transactions calculations as well. It is just a completely new asset class. But right now, a help like that can get from a company like Binocs is like invaluable. It's very required. Else, like not everyone knows about it yet, and there is a learning curve for even the CS, not only for customers, not only for us, right? So now that it's like everything served on the plate. Okay, look, they have solved the equation for you. Then put this number into your system and be done with it, kind of thing.
Right.
So one of our users here, Nagesh, he's saying hi. Since two exchange CEO are here, is any merger happening? So I would like to say something to Nagesh first on this. Well, Nagesh, I don't know about merger, but definitely two CEOs sitting here are making life easier for you when it is coming to crypto time. Okay. Another question from the Pankaj Pal. He's saying there's a percentage of tax you have to bear, and it's calculated on the amount you want. Perhaps it's not within the 5 lakh ceiling of exemption fixed by the government. So I think he's talking about the different slabs that the government has created and how crypto taxation is working under that.
Yeah, so basically, this is one distinction of how you would like to treat different sources of income. So one is any capital asset appreciation, where you're investing in that asset as a financial asset and making some returns, which is a separate class of investment-led money making, and therefore whatever is that net tax due. Examples of that is, let's say, investing in equity, buying debt, and stuff like that, and also digital assets like crypto. There is the salary side, where you're working in a company and you're getting paid. Now, the payment of the mode of payment is usually, in Indian rupee. Maybe it'll start to happen in the digital rupee. In some cases, it also happens in cryptocurrencies, at least in parts. And in which case, wherever, let's say, if your source of your income as a salary is, some part in rupee, some part in a cryptocurrency, could be stable coins, could be, let's say, NFTs, could be any other asset. Now you will have to add all of that to your regular income. And if you're a regular employee of a company, then the regular tax slabs like 5 lakh, 10 lakh rupee, and so on applies. every slab has a different tax rate, certain deductions. So all of those will qualify whether or not your currency of payment is rupee, digital rupee, or crypto. Uh, in case you are again a business, different sort of tax laws apply because you can set off some of your costs against your income. So it depends on the source of making that profit, and in what category does it apply. If you're acquiring an asset, a crypto asset, as a financial investment, so it comes under the capital asset tax class, which is the 30% gain on any income that you make. If it is like an income type, then it is based on your tax slabs. Uh, and if it is like a business income, if this is your regular day-to-day business and you're getting some part of or all of that money into crypto as a financial asset, then again, depending on whether you're a consultant, whether you're an employee, whether you're a business, the way any regular business or an employee or a consultant would get taxed for their incomes, will the same rules apply. So
Okay. I hope, Dipankar, your question has been answered. Another question we have from Sachin Kumawat. He's asking crypto tax myth or not? 1% TDS plus 30% capital gain tax plus income tax. How much do we gain? Very wise question.
No, okay. So here there is quite a bit of misunderstanding in the question itself. Okay. So the 1% TDS, it's a standard 1% TDS whenever someone is exiting from crypto position. They could be exiting from crypto position to another crypto position or to normal currency position like Indian rupee position. But that is just the advanced tax kind of thing that the people end up paying, right? So then comes the 30% tax, which is a part of the income tax itself, which is also called self-assessment tax, because it is an individual who should do the taxation calculation with the help of their CS and do the payment to the department. So when they are doing that kind of self-assessment tax, when they're calculating the TDS that they have paid, all of it, you will get the deduction of it, which means because you paid it in advance already. Let's say if I bought one Bitcoin for 25 lakhs and if I sold it for 30, when I was selling it for 30, then the exchange usually deducts 1%, which is 30,000 is deducted already. Then let's say at the end of the year, I didn't do any of the crypto transactions. That's the only transaction I did. By the end of the year, now I need to file the taxes. So I see that okay, by buying price was 25 and selling price was 30, which means my income is 5. So the total money that I made is like 5. 30% of that is 1.5 lakhs. Out of 1.5 lakhs, already 30,000 was deducted by the exchange and paid it for my PAN card already. So now I only pay 1.2. 1.2, yeah. So it is like all TDS plus the 30%, all of that combined will actually be the 30% income tax. And there is nothing like 30% tax and then income tax. It is 30% itself is the income tax. So the maximum you would ever pay is 30, including TDS. Yeah.
Okay.
and the salary taxes and the 30% taxes are actually mutually exclusive. So if you're paying for any crypto holding or receiving salary like income tax, you will never pay a 30% tax on it. So because uh, it's a different source of income which is already being taxed. If it's treated like a financial income for your investments made, then you're liable for only the gain portion, like Sathvik was saying, maximum of 30% tax.
Okay,
There's one more small thing I think like so a lot of people keep asking, right? So let's say one person is providing services and he charged 10 lakh rupees and he got it in Bitcoin. Okay, let's say one Bitcoin he got for argument's sake. And one way is he instantly sells it to know what is the exact value so that he will do the profit loss difference and then he know what he has to pay. So here the crypto angle itself is not there. All it has happened is the consideration that has come is in crypto and he sold it immediately, right? But another case in this is after he gets Bitcoin, he holds it. He holds it for 1 more year or 6 more months where he knows that the price would go up, for example, and it happens that way, unfortunately. And if he sells it, then what does it look like, right? So now actually we have to consider it as two transactions. The first transaction is he provided services and he got Bitcoin. Okay. On that day when he received the Bitcoin, the first transaction is actually complete. Okay. And then comes the start of the second transaction. From that day onwards, till he actually sells the actual crypto. So for the first transaction, it is not to be treated as if it's a crypto income. It is a normal income itself. Let's say his expense was 9 and his incoming money was 10 lakhs equivalent. Only 1 lakh is the gain, the profit that he has received. It will become a part of his income tax slab. Okay. So now we have to consider that 10 lakh on that particular day is for second transaction. The 10 lakh is the investment. Is considered that way, and from then onwards, whatever is the time he is holding it, let's say it becomes 12 lakhs equivalent over 1 year in the same financial year, and he sells it. Now the difference of that, which is from 2 lakhs, I mean the 10 lakhs to 12 lakhs, which is 2 lakhs, that will become crypto taxable, like in the style of crypto, right? Yeah, which is a 30% slab. So the first part of it happened to be the normal slab depending upon his income and income tax. The second part of it is a crypto tax, which is 30% done. And in that particular one as well, when he sells it at the exchange at 12 lakh rupees, 12,000 already gets deducted from the TDS as a part of TDS, or the remaining money he gets it. Okay, so for 2 lakh rupees, the 30% is 60,000, out of which 12,000 is already paid as income tax. So for this, he only pay about 48. And in the first transaction between 9 lakhs or 10 lakhs, I think if he's falling under 10% slab or something, he only pay about 10K there.
Okay.
So
Sachin, please take care, and this entire confusion, don't keep any confusion in your head. Obviously, we are here to clear your doubts. Again, I hope it is clear to you that you have to in all pay 30% tax on your cryptos. That is inclusive of all the other things. Okay.
So whenever there is a complex transaction, or whenever there is a transaction, if there is a mechanism to break it, to understand, it should be understood after breaking it only.
Exactly.
You cannot combine transactions and then try to make a sense. It's like not going to work. You have to go it at the atomic level. You cannot break this transaction anymore. It is simple going out, simple coming in. Everything has to come up to that. Simple out or in, right? If it is 2-3 things combined, then it's invalid. You have to break it. Yeah, you should break it and then analyze, pay the taxes, and be free.
Just like how we would study, like divide massive paragraphs and study in lines by lines.
You should break it. You should break it. You should break it and do.
Okay, so there's another question which you have already addressed actually, but I think our user was not present at that time. Unoversity, okay, it's called Unoversity, the account. Okay, lovely. He's asking, will the digital rupee will be taxed? You've already addressed it, but if you could briefly just readdress the same question.
So, while the regulations and clarity around digital rupee is gonna come, but because and all the early signs are that digital rupee will be like a digital currency and not a digital asset. And so any transaction, any exchange of any asset with digital rupee, at least the digital rupee leg of it is like treated like a currency. And I'll give you one example. So let's say, as against digital rupee, if you are transacting any Ethereum coin, let's say you're buying any Ethereum using USDC or USDT, which is like a stable coin, which to a lot of crypto investors seems to be like a cryptocurrency, like a US dollar equivalent. But in the eyes of the government, it is like a digital asset. So you're almost like buying a Reliance share with a Tata share. They don't understand that a USDC is not, it's a not a currency or an asset. They say everything which is not rupee or not rupee equivalent is a asset. And any exchange of, let's say, if you're buying a Tata share with a Reliance share, means you are actually selling Tata share, or you're actually buying Tata share, you're selling Reliance share, and any gain made on Reliance share is to be taxed. Any cost of acquisition of Tata share has to be taken at the time of the transaction. But when it comes to, let's say, introducing digital rupee in this leg of trade, so let's say if you are buying an ether with digital rupee, then at least it is not considered as a swap of two digital. Yeah. So one immediate implication is, instead of paying 2% TDS on both the legs of the transaction, the user both sides will be paying 1%. And and yeah, I mean it will further increase the liquidity in the system. I mean, any sell purchases, etc., is more easily convertible and cheaply convertible to actual rupee, etc., because it's actually a central government backed digital currency. So I think it's, it'll ease out on the liquidity side for sure, and it'll definitely ease out on the trade side as well, because only one leg of the transaction is gonna attract TDS.
Yeah, so true. Okay, so this one question, I'm just ending the session with this, which is a question from me, not from the audience. How CBDC has come across and how people have recently got it accustomed with the entire UPI system. Okay, it's what past couple of years that it has taken. It has just got up a pace, and it's now a major mode of payment. Everyone is just pulling out their phone. So, how is CBDC going to benefit us in this term, in terms of digitalization and other things?
So I can share my view. I think, and maybe Sathvik can please add.
Mhm.
So I think CBDC is a great move. One, overall, if you look at, sort of zoom out and see what is government of India's take on digital assets and cryptocurrencies, they themselves launching CBDC is a great validation of the technology
True.
and the future of applications that are possible on top of it. Uh, I think one big implication, one big enhancement the government can do using CBDCs, removing the counterfeit currencies in the
Uh,
system. So, once the existence of rupee itself becomes like a digital existence, and the more, so with UPI, a lot of transactions are happening digitally. Now, storage of money itself, if instead of cash can happen in the digital currency form, maybe it'll lead to more lesser and lesser issuance and need of any physical currency bills,
true.
which will further reduce the counterfeit notes, etc., prevailing and in circulation. Tomorrow, so that's one. The second, for a country like India, any government scheme which comes, the government's ability to, let's say, if government launches a scheme, wants to distribute, let's say, 10,000 or $10 billion worth of money to poor farmers. Now, their distribution is via some third party intermediaries, could be banks, could be other third party institutions, etc. Now, with CBDC, you can actually directly remit those money equivalents in you know wallets linked to Aadhaar cards. So the role and the cost associated with the intermediaries, the cost, the leakages associated with the intermediaries will completely be gone. And so, for most of the schemes, the implementation and the efficacy of those schemes by the government will get 10x more effective. So that's my view. Apart from the benefit of the startup ecosystem, more and more apps being coming up on the crypto ecosystem side as well will improve.
Mhm.
So yeah, Sathvik.
Yeah, I think this will be eventually like how we have NEFT, IMPS, UPI to be the different modes of payment. CBDC will also be one of the modes of payment through which our customers will be able to send us money and then buy the cryptocurrencies. That's pretty much how I see this. And definitely, this is not falling under any kind of crypto taxation. For sure, it is just like another mode of transfer, another mode of holding money. So how you can hold money in your Paytm, like Paytm money, or you can hold it in your bank account. It's like two different methods, but it's the same money
Yeah,
kind of thing. This will be another kind of another form of holding it, but the money is same.
the money is there.
The money is same. That's how I see this. I think one topic we didn't touch upon, did not touch upon, is the crypto to crypto conversion. You want to talk about that? Maybe I know she said it's the last question, but this is my last question.
No, so I'll like to start with the concept of virtual digital assets. So, like in India, any crypto asset, whether to us it may seem USDC is a currency, but it is actually like a digital asset. Any stable coin, any
Mhm.
cryptocurrency, any altcoin, any NFT equivalent is like a virtual digital asset, is like a financial asset and not like a currency. And any, like you're saying, Sathvik, any exchange of one crypto asset to the other. So let's say if you're buying Ether or Bitcoin using a
USDT.
seemingly currency to us, to a government, you are actually using one asset to buy another asset, and that asset is not a currency. So basically, in their eyes, it is like two different transactions. So you're selling a USDC for rupee. In case there's any gain or loss made there, so whatever net of gain and loss the tax applies, you are required to file for it and pay the taxes. And then there's a buy transaction of on the ether side. So you are then converting your sale proceed of the USDC or USDT into Indian rupee, although it is not like a actual transaction which is happening, but this is like an
should
implicit,
break it that way.
It is an implicit transaction, and then using those proceeds to buy the equivalent of ether, and so that proceed will become like the cost basis for ether in case whenever you sell it in future. So because it's these are two different legs of the virtual digital asset transaction, both legs are liable for a 1% TDS from the buyer side to be deducted and deposited on the seller side. And whatever net of taxes, because there's a sale transaction of USDC like a stable coin, in case there's any gain or loss, I mean, if you bought it at, let's say, 80 rupees for a dollar, and then sold it when US dollar to or USDT to INR was, let's say, 86 rupee. So you made a 6 rupee gain, and then so at least that 6 rupee gain is to be taxed at 30%. And let's say, in case the buyer is depositing 1% of the entire trade value, you will have to deduct that from the actual tax due and pay the remaining tax as the entire, let's say, tax due for that leg of the transaction.
Sure. And another one last thing is a lot of people in India think, okay, if you do in Indian exchanges, then the TDS is applicable and eventually income tax is applicable. So they try to take their digital assets and do all the trades on international exchanges because they're not converting into Indian rupees anyway. Those ticket is not applicable. So do you want to comment upon how that TDS is applicable and how the income tax is applicable, especially if an Indian resident is doing those kinds of transactions on international exchanges?
So, honestly, we are still figuring out as a company a strong view on it. This is just like I would say, unqualified sort of a view. So at least my view is, anyways, the TDS is not like your final tax. And if you're overpaying TDS, you are liable to also claim it. In fact, now Government of India's tax department has become very extremely efficient. The sooner you file taxes, in case you're overpaying, you get an instant refund. So a lot of these things we are seeing already implemented. So anyways, TDS is not like your final tax. It's like a tax deposit for a future liability.
Yeah, it's advance thing. Yeah.
So in case that liability doesn't exist, let's say you paid 10,000 rupees TDS, out of which you actually did not make any profit in any crypto trade. So you're liable to get entire, let's say, tax money back. So
refund.
So it'll come as a refund to you. Now, how they are sort of circumventing that on actually any exchange which is as per the Indian laws, who's catering to Indian customers both on the buying and the selling side, is required to comply with it. I don't know how they are not still deducting the TDS, because maybe the rules are not yet very forcefully implemented on them. But I think in future these things will come by, and I think the laws and rules will be same for any exchange catering to any Indian resident, whether it is any exchange internationally or domestically.
Yeah. So initially, say about 1-2 years ago, a lot of the platforms which were charging in American dollars to Indians, right? So they were not taking anything like GST and such. But now, as I see, at least from this year, I have seen more than 90% of the businesses, even though they are not in India but located elsewhere, resided elsewhere, no connection to India in any way, they still are charging the GST. And then paying it to the Indian government, even though it's the company is not even Indian in any way. So here, all that is coming to the matter is whether the person who is buying it is Indian or not, not about who is providing the services. So I believe it will be very similar when it comes to the crypto exchanges as well. So whatever is happening right now, there's a lot of people who continue to think, okay, I'll do the trading in the international exchange. They don't deduct TDS, and they'll be able to do better trades, or they'll be able to do multiple trades. And this information is not available in India yet because like they're not parting it anyway for the time being. Or maybe when it comes to income taxes, I mean, because when they're doing a lot of crypto to crypto trades, that a lot of them think that it will not even come under the income tax ambit because they are not cashing it out. So there's a lot of such kind of misconceptions exist. So being it, this is my understanding from my CA as well, that irrespective of where the trade is happening, TDS is applicable. If the exchange is not deducting TDS, which just means international exchange is not deducting TDS, then the individual who is doing the transaction should calculate and still pay. So that we on the buyer side itself, we have to do the calculation and pay because the seller is not holding it for whatever reason. That is one thing. And like Tanmay said, if there is crypto to crypto or anything to anything, we have to be broken down. And in every case, you have to find the INR equivalents to know whether there was a profit or loss. And if there is profits, it should always be accounted towards doing the income taxation. Yeah, I think this is like very intense topic. I think we should maybe do one more to go one step at a time. It's like quite a bit too much. Sure, we'll plan that.
Okay, so I think there's just one yes or no question for you from Margaret Pai. We'll just finish off with this, guys. Okay, so he's saying that if the salary is not chargeable, but if outside income from crypto has made my total income above the ceiling amount, then I shall become chargeable to income tax. So I think he means like if you are in certain lab where you're not supposed to pay the income tax, but then your crypto income is taking your total yearly income above that. So are you supposed to pay taxes or not?
No, absolutely. And it's not about that sudden influx of crypto income has suddenly increased your tax liability. The slab tax rates are above whatever money you made above that slab threshold. So let's say if your income is right now 2 lakhs in Web2 equivalents, and then you're making $10,000 or 7-8 lakhs of more money into crypto. So the delta of over 5 lakhs is what you sort of pay with the new tax slab. So basically, there it's I would say a fairly efficient way to tax the income tax, and so whether the income is in rupee or crypto, I don't think there's any loss or gain to be made in trying to optimize. So any income, whether you're receiving it in crypto or in rupee, the tax liability on it is the same. So
but if the second part, what he is talking about, if it is through trading, then it will not even fall under this. So then it will be a separately 30%, and the first part, which is not yet being taxed because it's not under the not falling under any taxation limit, will continue to be not falling.
Okay.
But if the second part is a consideration and it was actually a pure profit because he did some services or he gave some products and he got the money, instead of money he got the crypto, in that case everything gets clubbed and all of that inclusive will become one profit. So it depends upon whether he's getting that gain through trading or if he is through by doing some product services. That will distinguish.
So I think this was a really, insightful AMA, I would say, because a lot of confusion when it comes to tax thing and other things, calculation of it, and how there are different things around it. Everything. I think all of our audience must be really grateful to know all of those things. So this will be all for today, guys. We'll see you on see you in one of our another AMA, and for sure we'll take up more of such issues related to taxation, because I know it's a very vast topic and a lot of things revolve around it. So for sure, for now, bye bye to all of you. See you in our next AMA. Stay tuned for more insightful content like this.
राज, बाबूजी के आशीर्वाद से हमने अपनी नई शुरुआत तो कर ली, पर अपना फ्यूचर प्लान कैसे करें?
बड़े बड़े शहरों में ऐसी छोटी छोटी बातें होती रहती हैं।
Looking for perfect start? Get a Bitcoin today. Download the Unocoin app.
Crypto products are unregulated and could be highly volatile. Please be aware of the risks before investing.
जब मैं तेरी उम्र का था ना तो एक सक्सेसफुल करियर, लॉन्ग टर्म प्लानिंग सब रेडी करके रख चुका था और एक इन महाराज को देखो पूरा दिन फोन में लगा रहेगा।
दैट प्लानिंग तो मैंने भी कर रखी है ऊनो कॉइन के साथ।
नए जमाने के साथ नई चीजें आजमाएं। लुकिंग फॉर बिटकॉइन? डाउनलोड द Unocoin ऐप।
Crypto products are unregulated and could be highly volatile. Please be aware of the risks before investing.
Guys, we really need to work hard. This wasn't a good quarter. Tell me, are you happy with this?
Unocoin.
Want to earn Bitcoin? Just grab your phone and shake it. Download the Unocoin app.
Crypto products are unregulated and could be highly volatile. Please be aware of the risks before investing.